Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Amar and here are the headlines. The expiry week has begun on a weak note. The Nifty sheds close to 1% in opening trade. It is now trading below 11,700. Open interest has surged in Jet Airways and Strides Shasunas stocks see fresh short positions. Oil marketing companies are the top losers on the Nifty after crude prices continue to surge. And Reliance Industry is among the top Nifty losers after a slightly subdued performance in the fourth quarter. And KPIT Technologies, earlier known as KPIT Engineering, demerged from what is now Birlasoft, has listed today. Speaking of which, let's talk about that and take a look. Now, there were various estimates when it comes to KPIT Technologies, and the estimates were around 100 rupees per share. It's currently trading at 101.9. So, well, that's what we have in terms of the listing. Of course, we must remember, and as I've mentioned, that this was the engineering services company which was demerged from what is now Birlasoft. So now Birlasoft is a complete all-out information technology company, and KPIT Technologies is an engineering research and development company. At this point in time, it is focused on the automobile sector and also specializes in AI and digital technologies, that is artificial intelligence and digital technologies. That said, the company gets almost all its revenues from embedded electronics and mechanical engineering solutions from the automotive vertical, and it has been the case over the last 4 years. And it not only has access to the Indian markets, but also Germany, Brazil, China, and Japan. So a lot of very, very important markets out there. Well, currently at around 101.9, as you can see on your screen, reasonably steady listing. Not too much to speak for, Navneet.
All right, Agam, it seems to be a steady listing in line with what the markets were estimating between the price of 90 to 100 rupees. All right, let's move on and tell you what's happening in the futures and options world. This is the expiry week, and it started on a very, very weakish note. In fact, they're selling across the board that we're seeing, be it for benchmark indices or also for the broader market indices. Nifty currently trading around the levels of 11,650. Remember, on the downside, just watch out for those levels of 11,550 to about 500, which is a very, very strong support going ahead even for the May series. Futures not doing too much. The premiums obviously have been falling in the past few sessions. Bank Nifty has also succumbed to selling pressure. Remember, on Thursday, in the last hour of trading, we did see some selling pressure coming by, and that continues. Bank Nifty is now trading below the mark of 30,000. It's down 300 points in trade. But I just want to pull up the Nifty contributors list and tell you which are the stocks this morning which are dragging the index lower. So clearly the biggie Reliance, which was up 3%. Remember, that has 10% weightage on the index. That's dragging it lower by almost 24 to 25 points. HDFC, ICICI Bank are the other culprits, but clearly the support this morning has come in from the IT back. In fact, Nifty IT is the sole sector index which is trading in some bit of positive territory, so watch out for that. The India Volatility Index, this is the expiry week. You can expect more volatility to come by, but this is almost at over 3-year high now, trading around the levels of 24, so watch out for the volatility as well. Let me quickly tell you on the option side what sort of range that you can expect. So this morning has been all about call riding. The call premiums have obviously fallen with markets tumbling. So 11,700 is the strike where a lot of call riding this morning has been seen. It's added nearly 14 lakh shares in open interest. Not only that, even the 11,800 strike has seen a lot of OI addition coming by. But watch out for the 11,500, as I mentioned, on the downside. There is no fresh put riding, Agam, which has come in at least till now. In fact, on the put side, we're seeing unwinding for strikes like 11,750 and the 11,800. And clearly, the next series, which is the May series, market will be watching out very keenly because that's going to be even more volatile with the elections results coming by.
Absolutely. It is going to be a very, very crucial bunch of weeks actually over the course of the next 1 month. We are going to go through, of course, the elections and plenty of other factors, including earnings, that may also actually move the markets, considering we will have a bunch of earnings coming over the next 2 to 3 weeks, and that is where you have a whole host of Nifty company earnings which could still throw up surprises. But let's also take a look at all those stocks stocks which are seeing a considerable increase and a decrease in open interest. And I suspect, this is around the time when we start seeing some unwinding. But Jet Airways, it moved out of the F&O ban, and there you have it. If traders are taking this opportunity to go ahead and sell further, 28% rise in open interest, I suspect it will likely move back into the ban in today's day of trade if we continue to see these numbers. But we're going to have to wait until the final hour of trade for that confirmation. Strathchasun is seeing weakness, shorts building in, even as 6.5% is added to its open interest. No surprises that BPCL, which is looking down by as much as 4.5%, along with peers IOC as well as HPCL, all seeing shorts. PFC and ICICI Prudential as well. Well, looking at a lot of increase in OI, but PFC seeing considerable cuts. ICICI Prudential isn't looking at much movement in its underlying. Now, when it comes to unwinding, and again, as I've suggested, considering it is expiry week, we're likely to see a lot of unwinding coming through. Reliance Infra, well, Bharti Airtel, Tata Global Beverages, of course, is seeing short covering after Tata Coffee, its subsidiary, has come out with a very strong operational earnings. Infosys and Vedanta not seeing too much in terms of changes in the spot price, but there is unwinding in its open interest, so we'll be watching out for those as well as we move in. Navneet.
Well, these are the stocks to watch out for, but we've shortlisted few stocks which we will be addressing with our technical experts on the show. The first one is the biggie itself, Reliance Industries, which has come out with its quarterly numbers. Remember, the profits declined for the first time in 17 quarters. The debt has also risen, and obviously the street was watching out for the ARPU number for Jio, which has fallen for the 6th consecutive quarter. But remember, the stocks recovered from the opening levels that we've seen, so we'll discuss that one. Jet, as Agam highlighted, it's out of the ban, and clearly it gave a room for fresh shorting this morning. That's the other counter. Yes Bank, that's had a sharp fall. In fact, on Thursday it had fallen nearly 4%. It continues to fall today as well. The results are, mind you, this week. And the last one that we want to discuss is Dewan Housing. It's fallen for the second straight day, down 8% on Friday, and this one is seeing some fresh shorting in today's session, Agam.
All right. Well, on that note, let's get in our experts. Before we do that, here's a reminder. If you have any queries regarding futures and options, you can call us on 022-454-04141, or, of course, write to us on Twitter, Facebook, or YouTube with the AskPQ hashtag. And on that note, let's get in our experts for the day. We have Navneet Daga of Yes Securities and Amar Singh of Angel Broking joining us on the show. Good morning to both of you, and thanks for taking the time out. Navneet, I'll start with you. Well, we are seeing a little bit of weakness, but is this one of those moves where we're seeing a little bit of decline? Would you want to take the opportunity to go and buy into these indices, or you'd want to wait?
Hi, good morning, Agam. Well, look, it's a kind of a big decline at the start of an expiry week, and we have seen the walls have been rising continuously on the wake of the kind of a domestic events, as well as the kind of a global trade data that we are getting in. So to my understanding, it would be kind of a big braveheart trade to go ahead and buy into this. I'll say this: one can wait for levels. If it started to break below that levels of 11,600, that's where a lot of long unwinding will started to happen in the market. So to my understanding, I'll basically wait for a confirmation for a buying, as well as at this point of time, market has been stuck in that particular band of 200 points, 600 to 800 range on the spot levels. On the Nifty has been what the entire month we have seen through. So overall, if I look at it, it's a kind of a very healthy kind of a setup whereby we have seen sideways action after a big rise, so it digests the gains. But however, the kind of a movement that what we have seen overnight in the terms of the crude movement and the rupee INR pair as well, the kind of a movement that we have seen, to my understanding, there would be kind of a long unwinding pressure happening in the later half as well. So if until unless 11,600 has not been broken out, I'll say that one can look to buy into that dip if you're getting into. So in fact, wait for a confirmation. If happen to close above 11,700, then the chances of more short covering might happen during the day.
Okay, that's the view coming in on the index. Nifty's trading around those levels of 11,650. Hi, Amar. Good morning to you. Would you execute any trade, or would you be watching out for some key levels before initiating any sort of trade, either on Nifty or in Bank Nifty in this expiry week?
Yeah, I would say that looking at Nifty and Bank Nifty, technically on the daily charts, clearly, as I had spoken earlier also, that we are seeing the bearish divergence on the charts. So that's one of the reasons higher levels are being sold into. And also, if you look at Nifty in particular, it is now coming close to a very crucial support zone, 11,650, 11,600 levels. That's a very crucial zone. So from there, we could expect a decent bounce back towards 11,750 odd levels. So ideally, any correction can be used as a buying opportunity with a stop loss below 11,550 and a target of 11,750 on the upside. As far as Bank Nifty is concerned, Bank Nifty is also displaying a similar sort of pattern, but Bank Nifty on the downside, if you look at it, it has got crucial support coming around 29,600, 650. That's a strong support zone. Whereas again on the upside 30,350. So it's a range play, but what we need to be careful about, as I said, that we are seeing bearish divergence on the daily charts. So higher levels would be difficult to sustain, but lower levels, since they are approaching support, strong support zone, so there could be a possibility of a pullback.
Okay, fair enough. Well, speaking of the Bank Nifty, Navneet has a Nifty Bank strategy and he's playing a put ratio spread for the April expiry. Well, for the uninitiated, a put ratio spread is when you buy a certain put of a certain strike on a security or an index and simultaneously sell lower level puts. And in this strategy is most profitable, and this is assuming that you are expecting the index or the security to move downwards, but not substantially. Based on that, Navneet, can you also take us through how you are employing this strategy on the Bank Nifty?
Well, again, if you look out, the Bank Nifty has been quite volatile over a period of time. In fact, we have seen almost 400 to 500 points of swing on almost on a daily basis. So, a strategy should comprise of a whereby we have got a low risk setup, whereby the outflow is minimal and the chances of if the event happens, the inflow is quite substantial. So in a put ratio spread, what happens is basically you're buying an at the money put and you're selling an OTM puts, that is in this strategy buying in 30,000 put option for the monthly expiry, which is at the money, and simultaneously selling in 29,500 puts, that is twice the quantity, 2 lots against 1 lot. So in the strategy we are employing in the spread of almost 65 to 70 points at this point of time, and looking at if we see further correction in the markets another percent or so, which is almost looking likely that it might break down that level of 29,800 as a support level. So the strategy would be quite profitable, and I'm expecting a target price of almost 250 to 300 also achieved in this week itself. I'll keep a strict stop loss if the Bank Nifty crosses about 30,000 and expire and the last day of trade, if it expires near to that above that level of 30,000, that's where you got a fixed loss of 65 to 70 points. That is a fixed outflow that we are paying. So to my understanding, that's a good risk reward strategy. If the market happens to correct another percent or so on the banks, on the Bank Nifty side, we might happen to make a decent amount of profit in this strategy for the next 4 days.
Okay, that's the strategy coming in on Bank Nifty from Navneet, but let's also get you some stock specific ideas going. Amar, let me come to you. Which are the stock futures where you would be advising to initiate a trade?
I would say the first one is TCS. TCS, if you look at it, this is one stock which is bucked the trend in spite of we seeing selling pressure across some of the major stocks and indices. This is one stock which is holding firm. And technically also, I would say even from a short-term, intermediate and long-term trend continues to remain extremely positive, and the bullish momentum is there to stay. Currently it's around 2164 levels, so any pullback towards 2145, 2150 ideally can be used as a buying opportunity with a stop loss of 2096 and a target of 2250 on the upside. So that's for TCS, and there is one on the sell side, and that is DLF. If you look at DLF, what we are seeing is that DLF, we are witnessing some selling pressure at higher levels, and DLF is a technically, if I look on the charts, it is clearly not able to sustain at higher levels. It did manage to pull back towards 187, 188 levels, but on the daily charts, it continues to remain extremely bearish. And the low that it had made on 11th April, that also is to be breached. So, on the monthly charts also, the stock continues to remain bearish. So any pullback in this stock can be used as a shorting opportunity. So DLF, a pullback towards 180, 182 levels ideally can be a very good level to short. with a stop loss of 186 and a target of 168 on the downside.
Okay, well, there you have it. That's one long call on TCS and one short call on DLF. Navneet coincidentally also has one long and one short. Navneet, can you take us through your calls for the day?
Look, that's how the markets have been playing. We've seen the divergent trends within the sectors. One short call on BEML, that's been one of my favorite trade in terms of going short. Its stock has seen some kind of a breakdown on crossing about 1,000 odd levels and it again retraced back. It continues 4 days of losses in this stock, and the momentum now it looks likely that it might accelerate on the downside. And so it's one can look to short at the May futures in the level of somewhere near to 940, 935 to 940 odd range with a stop loss of 969 on the higher side, and then playing for a target below 900 levels towards 9890 odd levels in the coming week. The second stock is basically the mid-cap IT space. After this the rupee INR pair movement on the high side, to my understanding it's likely that we might see a lot of traction coming back in the 90 stock. So TechChem is looking to me that it has formed a good amount of formidable bottom on the lower side, and it's looking likely that the move on the higher side is possible. So one can go long on the May futures on Tech Mahindra, and with a target of almost 840 on the May futures, and on the downside one can keep a strict stop loss of 790. That's where the entire trade will basically reverse. So to my understanding, it's a good risk reward strategy. One can look to be on the long on the IT stock, and selectively Tech Mahindra is the one pick from my side.
Okay, so both our technical experts have one ID pick for the day. And remember, we mentioned it's only the ID index which is right now trading in the positive territory. Let's quickly address the stocks which we want to with our experts. Reliance Industries is the first one. The numbers came in the evening on Thursday, and precisely so you're seeing this stock reacting to its numbers. And also we've received one query on YouTube. So let me first address the stock. It did open 2.5% lower, but we've seen some recovery from those 1345 levels where it opened at. Amar, let me come to you. It's recovered almost 20 rupees from the lows of the day. How are the charts looking? And then I'll come to our viewer query as well.
Yeah, looking at Reliance, I would say the trend, the long-term, intermediate-term trend for Reliance continues to remain extremely strong, and the momentum is there. However, on the daily charts, what we are seeing is again a pattern similar to the indices. There is a bearish divergence on the charts, so that's the reason if we look at it, the high that was made on 1st April of 1406, 1407 levels. So we are seeing a double top formation in Reliance. Whereas on the downside, it definitely has got very strong support zone coming around 1320, 1330 levels. And today also there's been a bounce back. So I would say that we could witness some consolidation in Reliance. On the upside, 1380, 1400 levels, that's a level that Reliance seems to be capped. Taking that out would mean, again, next leg of rally. But from a long-term and intermediate-term trend, Reliance continues to remain extremely strong.
Okay, so that's how Amar sees Reliance Industries currently at around 1364 when its spot price is. But we have a query on Reliance Industries, so I'm going to take that one up since we are already discussing that. We have Tamil Selvam. He says he's bought the Reliance Industries 1300 put at 3.95, and well, he's expecting a 3 to 7% down move from current market levels. He actually wants advice on this one. So Navneet, let me take up Reliance Industries with you too. How are you expecting trade to pan out, and what would you suggest Tamil to do with this specific put, the 1300 put that he's bought, which I believe is for this expiry? He's losing out money. It's currently at around 1.6 now, so it's clearly well, making a little bit of a loss for now. What is your advice?
Well, look, Reliance overall, if I look at the larger term charts, it's looking likely extremely bullish. But however, after the result reaction, the lot of the price expectation was there in the price, earnings expectation was there in the price. So to my understanding, it's a kind of a reaction that one is looking at. To my understanding, I've seen major unwinding and at the money and ATM puts, but however, there isn't kind of a build up at 1340 odd puts. That's where the larger build-up is shifting to. Understandingly, I'll suggest that basically if it started to close today below 1350 odd levels, that's where, to my understanding, would be much more pressure on the stock going forward as well in the next couple of days. So I'll watch closely at the levels of 1340 to 1350. That's where, to my understanding, a lot of crucial support zones are. If it started to break and close below that level, you can monitor that level as in trading stop loss kind of a thing. If it started to break below that level, you can continue to hold on to your ports. But overall, looking likely it's an expiry week, and the time decay is quite fast in the if the event doesn't happen. So to my understanding, today's closing would be important. If it closes below 1350, you can carry your positions, unless if it's not, one should look to exit in this trade.
Okay, that's the view coming in on Reliance. Let me quickly address Jet Airways. Remember, the stocks come out of the ban. For majority of this series, it was in the ban period, and after coming out of the ban, we've seen some fresh shorting coming by for this counter. Open interest is up nearly 27%. It's recovered mildly, I guess, from the day's low. It was down over 30% last Thursday. Amar, since an F&O trader can now take fresh positions, it's out of the ban, but would you advise so, considering the stock's been so volatile and it's also touched its all-time low levels in today's session?
I would say that looking at the long-term charts for Jet Airways, it used to bounce back from 115, 120 levels somewhere almost 10 years back. So clearly it is very close to that level. It has bounced back from there. But I would say that since this is more of a management issue, so technically the stock continues to remain bearish. Higher levels will be sold into. Lower levels, I would say, I would rather avoid the stock.
All right, very quickly, let's also take a look at Yes Bank. It's been a very interesting one for sure, but it just so happens that, well, after today's down move, it has moved back below the 200 daily moving average, and that perhaps could be a matter of concern. Do remember, it has moved from and gained from levels of 150 over the course of the last, well, I would say 5 odd months. It's currently at 247. And it's going to also announce its earnings this week. So the question is, what do we do from here and where do we go? Amar, I'll come back to you on Yes Bank. What is your view here? Would you buy, sell, or avoid taking any trades here?
No, I would say looking at Yes Bank technically on the long-term charts also continues to remain now because it had bounced back, but on the long-term charts it's not very strong. Even on the quarterly charts, I would say that it has upside resistance, and on the short-term charts, it has corrected from almost 280 levels. But technically, if I look at the weekly, monthly charts, somewhere the stock has got now very strong support zone coming around 235, 240 levels. So from where again the stock could bounce back. It has made a low of 244 levels. So it's approaching its crucial support zone. So we could expect some bounce back. Also on the daily charts, it's moved into oversold territory. So there is a possibility of a bounce back, but again, upside seems to be capped around 265, 270 levels.
Okay, let's see whether there's any sort of recovery which comes by or not for Yes Bank. The other one is Divan Housing, which is seeing some selling pressure. It was down 8% last Thursday. Remember, this counter had also come out of the F&O ban last week, and from thereabouts there was fresh shorting which continued. Okay, it's down another 8% today after falling 8% on Thursday. So the intraday chart will give you a better picture. The open interest is down. I don't know if the positions are being rolled over for May series. Navneet, what's happening with this counter? Technically, it's down almost 18 to 20% now in just 2 sessions. What should be the advice?
Well, it's been all over the place. We have seen almost stock reverting from 100 to 180 and then coming back to almost a 50% kind of a retracement near to that 140 odd mark. So to my understanding, there's a chances that we might see some kind of a respite in the fall in this level of 135 to 140 range. I like to see the price action near to that level. If it started to stabilize, and then the chances that the overall setup, we've seen kind of 50% retracement, and again we see kind of an up move. There's a great chances of that. So I'll wait for the levels of 135 to 140 odd to monitor this trade, and if it started to close below that level of 135, to my understanding, it's going into that again the zone of 2-digit mark. So overall, not very bullish on the stock, and it's look likely that and the rallies, one should look to be on the sell side if you're getting towards that 160 to 170 mark. I'll not trade on the long bias unless it started to close above that level.
Okay, guys, before we conclude this show, I'm just going to take one more query up. It's from Harsh Jethani. He seems to be in a little bit of a pickle with L&T Finance. He says that he has one lot of L&T Finance at 153. He wants to know if he can roll over or should he sell? Now, there is a little weakness here, and L&T Finance is currently at 144, so he's making about a 10-point loss. Amar, very quickly, what would your advice be to the viewer? What should he do?
He should hold on to his position, and only if it trades below 142, he should exit. Otherwise, there is a possibility that the stock could bounce back towards 150 levels.
Let me just quickly pull over DCB Bank. That stock's gone up. In fact, there is both price action as well as OI action, which has been seen here. Remember the results that come in last week, but stock currently is up nearly 3%. It's a top F&O gainer as well for the day. Navneet, any thoughts on DCB Bank? Is there any position that you would advise to take?
Well, to my understanding, it's a very interesting chart. It's showing a lot of resilience even in the falling market, and it's gone for a time-wise correction in that period of 205 to 195 odd zone. It's consolidated, and it's looking like that the up move is possible. So, to my understanding, if somebody is having a kind of a larger time frame in terms of 25 to 30 days, or it's looking like that it's heading towards that 230 odd mark, with a stop loss of 195, one can still play on this on the long side. The entire move would negate if it started to close below that level. So, to my understanding, if looking for a larger time frame, one should look to be in that stock and with a stop loss of 195 on the lower side and a positional target of somewhere into 235 to 230.
Okay, we'll leave it at that. Well, on that note, I'm going to thank both our experts, Amar and Navneet, for joining us and taking us through their views on the markets as well as solving some of our viewer queries. For more updates on the F&O space, you can check our website out, bloombergqueen.com, especially the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. Lots more lined up. Stay tuned to Bloomberg Queen.